All right, it is the top of the hour, and I want to welcome you to our series, homebuyer webinar series for first-time homebuyers, and all really. Today is a general topic, so thank you all for joining our call today. My name is Dan Sugg, and I am the Chief Mortgage Lending Officer here at Michigan First Credit Union. I sit at our Evergreen Financial Store. Actually, if you've been here to the lobby, it's right behind the coffee shop. It's where our mortgage team sits. And then, of course, we have offices throughout the state. I want to walk through our agenda today. We're going to lead off shortly with speaker introductions. Then we're going to jump into what I think is going to be a super exciting topic. It's something we deal with every day here at the credit union. That's getting your credit in shape. Really, your propensity to repay any kind of debt is shaped by your credit and what you've done in the past. And certainly thinking about credit across my lifetime, I think when I was young, I felt like, boy, if I had one or two missteps, or if I did something bad in my credit history, I'd be ruined for life. That's what I felt when I was young. And I've come to learn, certainly over the time here in the industry, that no, credit is something that you can improve, and we're going to learn some of those tips and tricks today as we talk through that. And we have a couple of really good experts today, certainly from Michigan First, to talk through that, and then we'll finish with our closing remarks, and if we have time, credit questions and answers. But I don't want you to save your questions till the end. If you could put those in the chat box. Zareen is on from our team today, and she'll be monitoring the chat box for that. So let's jump right into our introductions. First, a veteran of our webinar series, Anne-Marie Rogers, one of our loan officers here, is joining us, and she's going to give us the perspective from the mortgage side and how credit affects mortgage. So Anne-Marie, why don't you take it away and tell us a little bit about yourself and what you offer our members. And you are on mute, Anne-Marie. Just make sure you come off mute.
Thank you, Dan. Yes, well, I've been in the mortgage business since 1997, and my focus over the course of my career has largely been at first-time home buyers and helping them get into the home for the first time. I know it can be a very intimidating and frustrating process, so I always try to work with people to make it as easy as possible and make sure that people understand from start to finish what it is that's expected and how we can create sustainable home ownership for them.
Yeah, and I've noticed over your career, you do specialize with first-time home buyers. And I don't think that's because certainly they're the least amount of work. They definitely
not.
They're beyond, but it is the most rewarding when you can put somebody in a home. I don't like to say a house, but definitely in a home. And that truly has meaning for us here at the credit union. So thank you for joining. Now on to Brock Knoll. Brock is one of our superstars on the consumer side, or in the lending part of our business. He is been here for a long time, and certainly one of the people I look to in the credit union as being one of our subject matter experts, especially around the credit piece, and brings a unique perspective on maintaining and establishing your credit. So Brock, tell us a little bit about what you do for the credit union and what you do to serve our members.
Absolutely. And thanks for having me on today, Dan. I've been with the credit union, as Dan said, for a long time, over 15 years now, and I've done several roles here in my time. If any of the members on the call today have been members for a long time, they maybe see me in the branch if you've been a member for over 10 years. So I've helped our members in every aspect of their finances that I can. Most recently, I've been in our lending team, helping our members with their consumer loans. One thing that I take a lot of pride in, and always have really, no matter what I've done here at the credit union, is educating our members. It's very important to me that we teach our members some of the things that us industry insiders know or come secondhand to us. But maybe if you're not in this industry, tips and tricks, or tips and trades that you may be able to take with you, either if you get on a phone call with us or if you come into the branch. So, I always like to use the example, I don't know anything about cars. So when I go into my mechanic, I've built up a trust with a mechanic that I know is going to tell me the right things to do for my car, and, not give me bad advice to try to take advantage of me. It's the same thing with your credit, especially, but with anything in finances, even with you guys on the mortgage team. You guys are the experts. Our members trust us at Michigan First. So always come to us, ask us questions. We're going to give you the straight answer and give you the best advice on how you can either own a home, how to get the best interest rate if you're doing a consumer loan with us. So I really am passionate about helping our members understand their finances. And out of all the things that I do here, that's what I lead with most of the time. But thanks for having me on today.
Yeah, and thanks for being here. And you may have seen like Brock said, you may have seen him in the branch, but you certainly would have seen him on some of our credit seminars on the consumer side. So really, like I said, one of the subject matter experts we have here. So let's jump right in. I'll start with Anne Marie. When we look to get a pre-approval, the first thing I think our members ask, and certainly our loan officers ask, is how do I learn what my credit score is without even pulling my credit? What tools do you use? And you're on mute again, Zureen, or Anne Marie, if you can come off mute. Thanks.
Sorry, one of the best things to do for a member is to go into our branches and sit with one of the financial service representatives, because they can do a soft pull of your credit, and they'll also do a credit review to let you know what it is that you can do to improve your credit. I know that a lot of people have had excellent success working with our financial service representatives to get their credit improved.
Yeah, and there certainly is a number of consumer tools out today that you can use. If you think about all the financial tools you can get in the App Store that will give you a credit score, and you have to remember that there are different rating systems for credit. We can't really go into that too much today, but in mortgage, we use what's called a classic FICO score, and some of the newer technology that's out there that aren't really meant to lend money use a different FICO, maybe a FICO 8 or FICO 7 score that could technically be different from that perspective. So sometimes the thing you see on your phone or from your credit card aren't always indicative of what you might see in a mortgage related scenario. So something to keep in mind. So Brock, if I think about, checking out that score, what are the benefits, I guess, of coming in to talk to the credit union about my credit score? Like, if it's bad, what can I do to improve it? How are you going to work with me?
Well, there's several ways you can improve it. And one of the misnomers out there, and something certainly before I started working for the credit union, or I was in the mortgage industry before that, before I started working in the finance industry, I always thought, hey, as long as I pay my bills on time, my credit score is going to be great. But then I learned over time that how you pay your bills is only a small fraction of what makes up your credit score. It actually is only 35% of your actual credit score. There's several other factors that go into having a high credit score. And for consumers out there, the higher your credit score is, the better interest rate you're going to get on any loan that you apply for. And when we're talking big dollars like mortgages, it can certainly make a huge difference on your mortgage payment and what's affordable to you. So you want to get that score up as high as you can. So if you come in and sit down with one of our representatives and they take a look at your credit report, they're going to give you the advice that you need. It could be several things that you need to work on, but they're going to pinpoint exactly for you a personalized custom approach to how to get your score higher.
Yeah, so I love the diagnostic part you used in your analogy around the car mechanic. We build that trust. Now we're really talking about going to see a personal trainer. Like, all right, now I need to know what I need to do to actually get my credit score up. And that really is a prescription when you think about it in improving your score. So we're going to dig into more of that just in a minute. But all right, so a lot of times we see young people, Anne Marie, they come in and they say, I don't even have a credit score. Like, what do I do? What would be the advice that you would give them in their mortgage journey of establishing a score?
Well, there are a couple of things that you can do in order to get a credit score. Number one of which is if you have a family member who has an extensive credit history, if you are added on any of their credit cards as an authorized user, you benefit from the length of their credit as well as the payment history that they have. And through Michigan First, we offer a couple of products that are very effective, one of which is a secured credit card. Basically works like a regular credit card, but you provide a security deposit, usually like a few $100s. And then over time, you're going to build a credit score. Our most effective tool for people who don't have a credit score, however, is our share secured loan. And that's something that's available through the branch, and it's a $500 amount that you provide them. I believe it's $530, and the $30 pays for the interest on the account. And what's effective about that is that it reports as an installment loan, and an installment loan is going to build your credit more quickly and more effectively than any sort of a revolving account.
Yeah,
So
to
that's the
build
one that I
that-
usually recommend to people first.
Yeah, so to build that history and build out the number of trade lines too, right? As Brock talked about, and he's going to cover in a minute, certainly there are a number of ways to build that score, and certainly being diverse in that approach, I think is very important too. And understanding that yes, installment and revolving debt is important, as is length of time and number of lines too. So Brock, as we're walking through this journey, what is some of the things that from a credit-wise standpoint that I should be avoiding before I apply for a mortgage?
Well, the thing that you do want to avoid when you apply for or you're thinking about even
Right.
applying for a mortgage is using your credit too much in a short period of time, especially. One of the things that affects your score almost as much as how well you pay your bills is something called credit capacity. Now, credit capacity, if you want to think about it simply, is how much of your credit cards are you using? You know, your credit cards all have credit limits on them. You can spend up to that amount of money and you can't go higher. The credit agencies look at all of your limits combined into one amount. So how much could you go out and spend with your credit cards right now if you wanted to? Now, the percentage of that amount that you're using, that affects your credit score. So if you're maxed out on all your credit cards, it's going to be really hard for you to get over a 700 credit score. Or if you have a really high credit score and something happened and you went out and spent all your money on your credit cards, you're going to see your score dip down. So avoid maxing out your credit cards, and avoid getting a bunch of new credit pulls. Basically, you want to avoid too much change on your credit unless you need to change it for the better. So you really have to watch your credit card usage if you want to go out and try to get a mortgage. That's the number one advice. There's several things, but that's going to probably impact your score the fastest, other than not paying your bills on time.
Yeah. And if I think about credit cards, they're a tool, right? They're a financial tool to help you manage your cash flow, but you really, there's not a great case scenario for carrying a large balance on a credit card, because aren't those interest rates generally higher?
They are generally higher. You're correct. And if you make your minimum payment on your credit card, you're never going to pay it off. I mean, you can go on your credit card statement and see what's the date you would pay this off if you only made your minimum payment. And usually it's a time so far out in the future, you're probably not going to see it. So you really want to avoid spending more than you have on your credit cards. And you really want to just use those for emergency purposes, or what we've come to find out is using your credit cards to help your credit score. It's
Right.
good to have them. It's good to have those available limits. It's just not good to max those limits out.
Yeah, certainly credit cards are, like I said, a tool, but they should be used sparingly and only really when it benefits you from a cash flow perspective. And remember, the Brock was 100% right. If you have one card with a $2,000 balance and you charge $1,800, that's going to kill your credit score. Absolutely, because your capacity will be over the percentage, above that 30% percentage. So really good advice from Brock there. So, all right, Anne-Marie, my credit score is pretty low. I'm going to go talk to Brock and get it up here, but I need to apply for a mortgage. What can I do in the interim? What is some of the tools that you would give a member to come in through with a low credit score?
Well, usually when people have a low credit score, it's been my experience, it's not that they have a lot of bad credit or they have a poor credit history. The reason that most people have a lower score is because they have limited credit usage, and they may have something like a collection that's recently reported. And because they have such limited credit, they're going to have, that's going to be they have a much more dramatic effect on their credit profile. So it's very important that people take care of everything on their account and try to avoid anything going to collection, because if you do have a very thin credit profile, that can dramatically impact your credit score. And as Brock mentioned, a lot of the people that I see, people are always trying to achieve an 800 credit score. And sometimes people are in the 600s and want to achieve a 700 credit score. And I would say that the number one reason that people are in the 600s and not the 700s is because, as Brock mentioned, that people are carrying balances on their credit cards. And if you have, for instance, a department store card and the limit is 150 and you charge 140 on it, that's going to dramatically impact your
Yeah.
credit score, especially if you only have a few trade lines. So that's probably some of the things that I've focused. The factors that usually hurt people's score is a history of late payments, recent collections, and utilizing their available credit. Some of the more dramatic events are recently charged off accounts, and repossessions are things that will more dramatically impact your credit score.
Yeah, those, you hit on a topic there that is near and dear to my heart, those retail credit cards. When you're checking out at any of the big box stores, they say, hey, for an extra 20% off, do you want to fill out a credit app today? And while that's enticing and sounds kind of cool, just remember that those generally are smaller available balances and are deterrents to getting your credit score up. So certainly think about consolidating into a bigger financial institution card, certainly like a Michigan First credit card that has maybe a little bit larger balance that you don't use as much of. So Brock, thinking of that kind of answer that Anne-Marie just gave us, what other things can affect my payment history, other, that can affect my credit score other than just charging things up?
Well, I want to piggyback off a couple of things that she said too, because she brought up a couple of great points. And one of them is collections. Collections are something that can stick around with you for a very long time. It's like that old shirt that you just can't get yourself to get rid of in the closet, and then it's not doing you any good. So if you have a collection, for example, let's say you had a Uverse account where you had your cable, and you said you returned your equipment, but they say you didn't return your equipment, which is one of the most common things we see. And all of a sudden a $200 collection pops up on your credit report. So on principle, a lot of people say, I'm not going to pay that because I returned my equipment. The thing that hurts you though, is that's going to affect your credit score for as long as it's on there. So a collection agency is going to try to collect that debt from you, and they're going to try to collect on it for a while. If they don't collect on it, they're probably going to sell it to another collection agency who's going to try to collect on it. Meanwhile, that $200 is now $400 because of all the fees that they've placed on it. What a lot of members don't realize is the date of that collection doesn't stay back from when it started. As long as a collection agency is still trying to collect on it, the delinquency date is going to be that month that you're in. So I've seen members who I just talked to last week, actually, that had a cable collection from like 2019 that's affecting their credit just as much now 5 years later than it was when it first happened. Those things can stick with you for a long time. And if you have those collections, you're never going to have a high credit score. It's always going to drag your score down. If you're lucky in the 600s, it most likely into the 500s. So sometimes you have to kind of suck up your pride and just pay those collections off so they don't affect you anymore. Because once you pay it off, the further you get away from it, the less it's going to affect your credit score. So don't let pesky little collections hang out there because they're going to kill your credit score. The other thing that Anne-Marie talked about here was not maxing out your credit cards. And one of the things that you just hit on a little bit, Dan, was maybe trying to consolidate those credit cards. So your credit cards are affecting your score if they get maxed out. So let's say you use an example, you have a $2,000 credit card, then you have an $1,800 balance on it. You don't really have a lot of available credit out there. If you just paid that credit card off with a different type of loan, like an installment loan, a personal installment loan doesn't affect your credit capacity. So if you pay off your credit cards with a lot of people call it a debt consolidation loan, if you move those balances from credit cards over to a personal unsecured loan, like an installment loan, all of a sudden those balances aren't affecting your credit capacity anymore. And you could see all of your availability open up on your credit cards because of that. And that's going to shoot your credit score up. So those two things are the easiest things you can do and the fastest things you can do to improve your credit score.
Yeah, and you triggered that collection piece too. We see that a lot in mortgage. It's pretty rare. There are some collection accounts like medical that no longer affect your credit score because we know that those medical collections can be kind of tricky over time. But certainly anything like you said, like cable related or retail related, look like they're brand new every time we pull credit, even though they're 6 or 7 years old. We used to think that they just popped when we pulled the credit, but they report every month that way. So certainly great advice there, Brock. So back to Anne Marie real quick. You're pulling my credit. I can't do a soft pull. I want to do a pre-approval. You're going to do a hard pull of my credit. How does that affect my credit score if I do that?
Well, mortgage credit pull generally does not provide a significant impact to your credit score. If anything, I believe that the score value is less than 5 points. And I do want to mention that it is imperative in order to issue a pre-approval, we do have to do a hard pull on a credit and pull all 3 of the bureaus. And I also want to mention that within a 45-day window, if you have multiple credit checks from different mortgage lenders, that those are all going to be considered just a single pull because they have the expectation that you are going to want to shop around for that mortgage.
Yeah, that used to be that you would get your credit pulled 20 different times. That killed your credit score, but they've since regulated that. They said, hey, if you're doing it in a period of time, you are in shopping mode. And certainly, but credit pulls are a deterrent to credit. So if you're thinking about applying for a mortgage, you do want to limit those, right? Based on, like looking at furniture or cars or a bunch of other stuff, you do want to limit those credit pulls, correct?
Yes, and we definitely don't want anyone out shopping for things or purchasing things or making any major acquisitions during the process. If you're going to be needing credit for appliances or things like that, please wait until after you've closed your loan because it could be an impediment to us being able to provide financing.
Yeah. There is a lot of industry talk, and we won't go down that rabbit hole today about changing the way credit is reported. Today, it's a snapshot. It literally, at the minute we pull it, it's like taking a picture of your financial situation that day. And if we did it tomorrow, it would be a different picture and a different score. And now, if you're pretty stable in your financial approach, it wouldn't vary much, if at all. But going forward, they're talking about using trended data, which is pretty interesting. And the industry is looking at that today, which is more over time, kind of like looking at a total piece. So more to come on that. All right, Brock, what are the different types of credit? I know we've talked a lot about the revolving versus the installment loan. Is there any other types of credit that our members should be aware of?
Well, there's revolving and installment loan is the 2 major ones, but you can break down those into separate categories too, in the subsets of each. So with installment debt, the installment loans are those that you take out, you have a fixed amount of time to pay that back, and then when you pay that back, you're done with the loan, right? So you're thinking about mortgages are installment loans, boat loans are installment loans, car loans are installment loans, and personal loans are installment loans. It's good to remember those types of loans don't affect your credit capacity. Your credit capacity is only reflected in what's called revolving loans. Revolving loans are those where you have a limit that you can spend, and if you pay it down, you can reuse it again. Most generally, people think of credit cards that way, but there's also personal lines of credit that you can have that do the same thing. The revolving debt's the one you want to watch using, especially before you apply for a mortgage or if you're thinking about applying for a mortgage. But one thing to remember too about all these types of credit is it's good to have a mix of them. I've talked to members in the past that are like, I can't control myself with my credit card, so I'm just going to cut them all up and close them. And we try to caution people, don't do that. You're going to take away all of your credit capacity if you do that. And length of credit matters too, how far your credit goes back. I had a member who I talked to, this was years ago, but she still had a Mervyn's card for some reason. If anybody can remember Mervyn's, the department store from like 1978, and she thought it was a huge mistake and she was going to call the credit bureaus and get this fixed. And I said, I know Mervyn's isn't around anymore, but don't ever call anybody about that. Just leave it on your credit report because that's your oldest trade line, right? Yeah. So these are all things that affect your credit, how far it goes back, having a mix of credit. So you want those credit cards, you want a car loan if you can, or some sort of installment loan. adding a mortgage to it through you guys, that's going to all improve your credit mix and improve your credit score. So there's different kinds of loans out there, different kinds, and those are all split into their own subsets of those types as well.
Yeah. And I know we've kind of hated on credit cards a little bit, but credit cards are a great tool in building your credit score. So I know that when my kids were younger and of a responsible age, we co-signed a credit card for them, and that gave them that date, certainly, that it was issued to them, and they still have those today, and they're well into their 30s. So certainly still using those credit cards is an advantage for them. So, wow, we are right at our time.
I have a
It
quick
always goes
question.
way too fast
Hello?
for me.
Before we end, I have a quick question.
I'm sorry, can you put your question in the chat? We don't want to share personal information with the group. So either Brock or Anne Marie will reach out to you after the call. So just throw ahead and throw your question in the chat box. So we're at our time. I apologize for us running short on our time here. We got kind of carried away. So we would love to share the most important takeaways from our two experts today. So I'm going to let Anne Marie go first. Anne Marie, talk to us about the 3 things you'd love our members to take away.
Well, first thing is a pre-approval letter, and the pre-approval letter is very important. And as I mentioned previously, you have to have all 3 of your credit bureaus pulled in order for us to issue one, because if you're making an offer, it's not really a complete offer unless you have a pre-approval. And it's so important for you to have that pre-approval so that when you're out shopping, you know what it is that you can potentially purchase. And then with regard to your credit score, the better your credit score, the better the terms of the mortgage. We do have what they call risk-based pricing in most of our products, where you're going to have better interest rates and better mortgage insurance rates if you don't put 20% down than if you had a lower credit score. And certainly I'm always available to ask any questions. So if you think that you're ready to purchase a home, I'd be more than happy to take some time to speak with you and see what we could get you pre-qualified for, and then we can go from there. Thank you.
Yes, the FICO score certainly can be affected by credit score. We do have some programs, certainly the state bond program, MISTA, that has a minimum credit score and a fixed rate, but certainly always better the higher the FICO. So Brock, what are your 3 takeaways for our team, our members today?
Well, first, and we talked about this quite a bit, but using your credit cards and your other revolving lines of credit, it can affect your chances of getting approved for a mortgage, first of all. So before you even start the process, if you max your cards out, your score might go low enough, or you might have so much debt that you can't get approved for a mortgage. But even after the process starts, you know, I've talked to some members who got their pre-approval letter for their mortgage, and they got so excited about getting into a new house, they already started looking for their furniture. They already started shopping for their appliances, and you might have to get your credit repulled if the process goes on long enough with your mortgage. And when their credit was repulled, all of a sudden, whoops, we have a bunch of new credit pulls and we have a bunch of new credit, and their approval wasn't there anymore. So you just have to be careful and be patient when you are thinking about going through the mortgage process. Try not to use your credit cards. And also, into my second point, applying for new loans during the process can be tricky, as you guys well know on your side. If you go out and after you're approved for your mortgage, get a car loan with an $800 or $900 payment. We all know how expensive cars are now. Yeah. You can't get a cheap payment anymore. You might not be approved for your mortgage anymore. There's certainly things that go into getting that mortgage approval. One of those is your debt to income ratio. If your debt to income ratio gets thrown out of whack because you've taken out new credit, you can affect your chances of getting that new house. So if at all possible, take it easy on your credit when you're getting ready to apply for a mortgage, and certainly during the process, let that play out. And then after you get into your home, start thinking about what else you need from a credit perspective. And the thing that I always like to end on in all the seminars that we do is that it's never too late to fix your credit. You talked about this earlier, Dan. No matter how far your credit score has fallen, and trust me, we've seen almost as low as you can go. It's never too late. You can always do things to work on it. You can always get it back up. The process might take longer for some individuals than it does others, but that's okay. You can always get there. Even if you filed bankruptcy, even if you're in bankruptcy, you can always bounce back. So don't ever give up. Come in and talk to us. we can certainly give you that customized plan to get your credit score back up to where it needs to go.
Yeah, and one, your first point about it being in the mortgage process and not buying something new, we actually now, the regulations changed a little bit. We do undisclosed debt monitoring on every application. So regardless of whether we have to re-pull your credit because of time, if you go have your credit pulled, it automatically alerts us during the mortgage process now, based on Fannie Freddie, and having to find out, hey, why did you pull your credit? So any credit activity we're alerted to during your mortgage process. That's been a change here in the last year. So wow, we're at that time. So thank you guys for joining the call. On the screen now is our way of helping you after the call. So if you want more information about the webinar series, please just email us at info@michiganfirstmortgage.com. You can apply directly if you're ready and you want to jump on michiganfirst.com/mortgage. You can see all of our qualified mortgage loan officers. We also are available at 365 Live at our 800 number there on the screen. Just choose mortgage. You can speak it or press number, I think it's number 7, and you'll get 24 hours a day to one of our loan officers. And of course, Anne Marie's here today. So there's her information and her direct line and our actual email address. And then if you want to talk to Brock, obviously you can reach him at any of those online or 800 number options, or any of us here at the credit union to help you. Just a word from one of our associated and affiliated businesses, Michigan First Insurance Agency, LLC. We do all of our home ownership insurance needs, and certainly are here and willing to help you through 40 plus different carriers. And they certainly have been busy this year, not only with homes, but with home and auto and a bunch of other policies. So if you want to reach them, michiganfirst.com/insurance, or at their direct line there on the screen. And then lastly, a big thank you to you for joining our call today. Thanks to Brock and Noel for showing up. We really appreciate your expertise, and we will see you on our next call in April, on April 18th. So happy St. Patrick's Day to everyone, and we'll talk to you soon. Thank you.